Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today we're talking about what price should you offer for a commercial property. And obviously that's a pretty open question, but I want to reflect particularly on asking prices. Now I'm talking about the current market as of kind of November 2025, but I work with a lot of clients. I'm looking for deals myself, and I work with clients who are doing deals too. And I'm looking for deals too. And a general observation that we all have in today's market is that we just can't get a lot of deals to stack up to the asking price. So I thought it would be really useful on this podcast to unpick that, because I'm sure many of you are having similar challenges when you're sourcing deals, and unpick why that is and potentially what you can do about that to be able to get some good deals in the current market. So the first thing to say is that I think there is a bit of a fallacy or a kind of bit of a misnomer that if you take the asking price of a property and then maybe get 10% off, that you're buying below market value. In fact, in commercial, that couldn't be any further from the truth. And that's because asking prices are exactly that. They're just something that an agent or a vendor wants for the property. It doesn't mean that that's a valuation. It's just an asking price. And the way that I work with my clients is we will basically work out what we think the property is worth, and then how you can add value to it, because majority of people I work with want to add value to get their money out of properties. And therefore, we don't start with the asking price. So let me just unpick that a little bit more to explain why that is. So first of all, what we need to do is we need to understand the motivation behind vendors and agents and why they put the asking prices on properties that they do. So if you think about it, when an agent is dealing with a vendor, they actually have quite a lot of different factors that they're dealing with. The first is the valuation that they will put on the property. And don't forget that they are agents. They are not in the business of they're not valuers very often. Sometimes agents are, like the smaller agents that are doing valuations all the time as well. But very often agents or commercial surveyors are split into selling and buying agents, like investment agents, letting agents, management agents, maybe kind of landlord and tenant, like rent review surveyors. And if you're buying and selling property, you are not necessarily a valuer. So you have got a number of factors that you're taking into account when you're putting asking prices together. The first one being what your client wants. Now, there are a lot of baby boomers who bought commercial. There's a lot of people who've owned commercial for a very, very long time. And that property has probably put their children through school and university. It's probably paid for lovely holidays, cars, houses for them, and has probably done super well over the years for them. Now, since COVID, since Brexit even, we've seen a real change in the commercial property market. You know, I think I've said on this podcast before, when I started out in the commercial property market in the mid-90s, any old fool could let a commercial property. You basically could let them on a 25-year lease. You could get a great tenant in place, 5-yearly upward only rent reviews, and really the tenant had no negotiating power. And that has changed a lot over the years, and prices have changed and sectors have changed. So if you think about the commercial market today, and anything that's occupied by a business is a commercial property, and you think about how many businesses there are, there's definitely winners and losers in our economy. We're a very mature economy, and we're not in a massive growth cycle that we might have been kind of 20, 30 years ago. And there's winners and losers in the commercial property market, and there's winners and losers in business. And so there's certain sectors that are, that they've had their prices culled, rents have reduced, like some retail, some high streets. And then you've got other types of property that is kind of flavour of the month. So you've got things like logistics, where supply is less than demand, and that's kind of fueling the market. And then you've got loads of little subsectors and loads of little niches. And those of you who kind of follow this podcast will know that I talk a lot about niching. And this is why we niche, because commercial property performs differently in different locations, different sectors, because of different tenant demand, basically. And so there's so many different factors that you're looking at that, and so a vendor might come to an agent to sell their property, and they're saying, I'm not going to take any, I've heard this so many times, by the way, I'm not going to take any less than this price for it because it's been a great performer over the years, it's fantastic. And not really thinking that actually perhaps it might have changed over the years, perhaps the market's changed, etc. Now, of course, it's an agent's job to temper their clients' expectations. But my experience, and I've been an agent for a few years, is that sometimes you just can't. And of course, as an agent, you want to get the instruction. You want to make sure that, you get the opportunity. And so whilst you try and manage your client's expectations, ultimately they are the client and they will make the decision. So if they want £1 million for a property that you think in your heart of hearts is worth 750 or 800, you'll probably warn them against it. But you say, well, look, let's shove it on the market and see how we get on. Now, there's obviously conversations differ, motivations differ, but that is a very common conversation that I've had with clients over the years. So you can see there that there's not much there's a lot of emotion and not much logic. And therefore, if you think about the asking price that property is going out for, you're going to look at that and think, wow, that's high. How did they get to that price? Well, they kind of got to that price because that's what the vendor wants. And then the other thing you need to remember is that it's not an agent's job to talk down the market. An agent's job is to keep the market buoyant, to talk up prices, to keep it thriving and operational. And therefore, the nature of the beast being that agents aren't going to basically cull asking prices. This is why we see a lot of deals being done off market, because what agents will do is they will very often send properties off market to a list they've got of investors that they know they've probably bought things and sold things through them before. They know they've got funds, and there might be an official kind of asking price, but they might say, I think you could probably get it for this price or whatever. And if they're not successful off market, then very often they will go out to the wider market. Quite often they will just go straight to the market, but it does happen a lot that deals are done off market. So to get in on those lists, getting that little black book is really, really important as an investor. So agents don't want to be seen to be talking down the market. So you will see asking prices reduce, but you're not going to see that as much as you see in residential, because you've not got the emotion of homeowners and, I've got to sell this house because I've got another one that I want to go to that I've fallen in love with. That doesn't happen in commercial. It's like, you don't have to sell it. I'm going to sit here until I get the price. And so that's kind of how asking prices sometimes are agents get to them. That's why they're put on the market at certain levels. So you can see the logic why we don't necessarily take a lot of notice of asking prices, because there's very little logic in the creation of that asking price. And, I very frequently look for properties for myself. I work with clients who are acquiring properties all the time. And we're scratching our heads in terms of, we can't get anywhere near where the asking price is. But that's not anything to worry about. That is completely normal. But what the really important message is, please don't let it put you off commercial. Please don't let it put you off commercial deals, or don't let it put you off kind of a certain niche where you think it might just be too expensive, because there's another way of getting good deals in those locations, which we'll talk about in a minute. So we look at asking prices, we use them as a guide, but we effectively try and work up our own valuation on that property. And obviously, for everybody, have different strategies. Properties are worth different things to different people. So if I'm looking at a site and I want to keep it as commercial, I'm not interested in any commercial to resi, I don't want to do any development, I probably can't get to the numbers maybe on certain sites that maybe people who want to do permitted development or do development can get to. And that's absolutely fine. My observation in the market at the moment is that where there's a residential angle, where there's permitted development angle, the hope value in the asking price seems to be even bigger, because there's a lot of people, I think, overpaying for that kind of stock in the market. So you need to be very cautious about not doing that.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
I look at commercial to commercial. I want to keep the properties commercial, and therefore, I'm going to be looking at it with a different pair of spectacles. I'm going to be looking at that property and how can I asset manage it? How can I extend leases? How can I reconfigure the space to get higher rents? I'm not looking at it as in, I can get 10 flats out of this or whatever. So it's a very different pair of spectacles. And of course, we need to make sure we buy properties at prices that suit us and our strategies. And that's really, really important, not to get talked up by the market. So when I start looking at a commercial property, we look at the asking price, we realize that there may not be some science behind that. I'm probably doing some agents an injustice, because there are some very, very good agents out there, and there is a lot of logic for some people. But my observation in the market at the moment is that asking prices are very, very high, and I just can't see how agents have got to it. The other thing that we want to be cognizant of is that really there's probably been a drop in the market. We've definitely been bumbling along the bottom for the last 3 years. A drop in the market doesn't materialize straight away because asking prices are still high. So whilst we feel like the valuations might have dropped, and in real time I'm seeing my valuations and client valuations definitely dropping, yields moving out, valuers value on capital values per square foot rather than on yield basis because of uncertainty in the market. By the way, this is all a good thing because it's full of opportunity. Then agents won't have caught up with that, because it's all about kind of sales transactions and comparables. And if something's sticking on the market a long time, it's probably an indication that the market isn't going to buy it at that particular price. So there's an element of kind of not wanting to bring the market down necessarily. And obviously that's not in agents' kind of interest to do so. So when we're looking at a deal, we need to work out what it's worth to us. So where the asset management angles are, and kind of how we can get to a value or a buy price that makes it just a no-brainer for us to make money from it. And ultimately that is the name of the game. And in 30 years in real estate, the biggest lesson that I've learned is that if you buy at the right price, you're going to make money. Whatever else you do, you're going to make money. So it's all about buying at the right price. And I really can't emphasize that message enough. That is genuinely the secret to doing great deals. plus asset management, plus forcing value through, because at the moment we can't rely on market increases. So what we want to do is we want to force that value through. We want to make sure we do some asset management on the property to be able to get higher valuations. And that could be anything from title splits to lease regears, reletting, reconfiguring space, increasing rents, adding floor space, whatever it might be. We want to make sure we've got the right strategy in place, and we always have multiple exits on that. So so when we're looking at a property, so I've been stacking deals all afternoon with clients as I record this, and we've been looking at deals kind of almost from, we're not working from asking price, we're working from, okay, what do we actually think it's worth now? So we've got, so today we've been looking at properties where the agent, the selling agent has been valuing it, assuming the property's let, but it's actually vacant. And also, don't forget at the moment that a lot of lenders or most lenders actually, are instructing their valuers to value on vacant possession value. What that means is that even if there's a tenant in that property paying a rent under a lease, the valuer has to assume that property is vacant. Now, you can play the game with this, because if you find a property where the vacant possession value and the market value are very close together, i.e. that property would let really quickly, then obviously it doesn't make too much of a difference. And that really is the sweet spot where we want to get to with our investing. But if we find properties where the market value and the vacant possession are miles apart, then we've got a problem in terms of asking prices potentially. So what we need to do first of all is look at where the rent is, and we can use the rateable value for the rent and adjust it slightly, or we can look at the passing rent, and then we need to work out how long the void would be if that property was vacant. So perhaps it's 6 months. What we do is we do an average over 3 or 5 years and reduce the rent in the first year to maybe 6 months rent if there's going to be a 6-month void. And then that will give us kind of a vacant possession rent. And then if we're assuming that the property is vacant, we'll also be tweaking the yield. We'll be increasing the yield a bit, because there'll be an assumption that property is vacant. So the vacant possession value is what you're going to get finance on. It's what you're going to get lending on. Unless you've got a 5-year lease with a blue chip tenant, the likelihood is you're going to get vacant possession value rather than market value lending. And so therefore we want to buy on the basis that we're going to be able to get lending on. So we have to buy on a vacant possession value. And of course, the best way of ascertaining that is getting a valuation report. But we don't want to do that before we've had our offer accepted, because these things can be quite expensive. So when I was stacking deals with clients today, we look at it on a vacant possession value. Where do we think we can get to? And then we look at it on how we can add value. So if it's a mixed use unit, how can we title split the units above? Maybe they're 2 flats or 3 flats or whatever. And, kind of how can we get buy to let mortgages on those? What do we think the commercial is worth now? How do we think we can add value to the commercial? Maybe extending the lease, or maybe letting a vacant unit, maybe splitting it into smaller units and, increasing the rents, whatever it might be. And where do we think we get to on that asset management? So where do we think the valuation is? And all again, what we do then is we look at increasing the rent and potentially reducing the yield for the reduction of risk of our asset management. And so the difference between that, obviously, is where you're going to add your value. And then we need to look at the finance. So if you're buying cash, obviously it's very different. But if you're buying cash, I would recommend you buy as if you're getting finance, because it does mean that if you ever want to get finance on it, that you can do. So we want to look at it on a vacant possession value, and then we want to look at what lending we could get. And the likelihood is we're going to get somewhere between 65 and 75% loan to value. And so therefore, say a property is worth 300,000, we're only going to get 75% of that on lending. So if we want to do all money out deals on commercial, we're going to need to make sure we buy it at a lower price, so that we've got potential to, we've got wriggle room to add our value, because, we're extending leases or letting vacant units or whatever. But we also want to make sure that we're not overpaying, so that when we're on 75% loan to value, we can get all our money out, or as much as we possibly can. Obviously, different people have different requirements for that. Sometimes some clients don't mind leaving 50, £100,000 in a deal. Other clients want to get most money out. So it does depend on your personal requirements. But we need to give ourselves a margin. basically, based on our finance, based on the valuation, so that we can actually make money from the deal. Because ultimately, why are we doing it otherwise? Now, there's plenty of people that will just park money into commercial and get a yield from it, and that's absolutely fine. Even then, I would say you want to be buying at a price where you've got wriggle room for the future. The buy price will really determine the future of your asset. And then what we also want to do is we want to buy in a niche where we think there's some longevity of tenant demand, because ultimately commercial property is all about tenant demand. So what we want to do is we want to look at properties where they're great locations or in good sectors, where we think that, when the market recovers, there'll be potentially some capital growth. We're not going to rely on it because we're forcing our value through ourselves, through our asset management. But there's just some good longevity. So if that property ever became vacant, there's a market for reletting it and getting similar type of rents, or maybe even improving the rents. And we can create units that maybe suits the market better than the existing units. I've got clients very successfully buying industrial units where there's very little tenant demand, maybe for 7,500, between 5,000 and 7,500 square foot units, and they're subdividing them into 1,500, 2,000 square foot units where they're inundated with demand and the rents are almost doubled. So that only works in certain locations, but that's a great example of how you can actually force your value through and make sure that you're really, really adding value. But again, the deal doesn't work unless you buy at the right price. So I think the message I want to leave you with today is don't be disillusioned by asking prices in the market at the moment. They do seem really high. What you need to do is you need to work out what that property is worth for you. And then obviously the next steps is that you put an offer out. Now, I've had clients recently that have put a very, very sensible offer out on a property where the vendor just had completely unrealistic expectations. And they almost got laughed out of court, actually. They got laughed out of town. They were like, it's insulting, and that's fine. You really shouldn't be putting offers out where your toes aren't slightly curling at the level of the offer if you want to do good deals. So don't be too worried about that. All you need to do is pop those in the follow-up file, just follow up every so often. And what we're really looking for is vendor motivation. So you can get some nice add-ons, some nice extensions in Chrome, which you can put onto Rightmove and Zoopla, and it will tell you how long the property's been on the market for. Telltale signs are, for sale or to let, prices being reduced, properties hanging around on the market. So look for those telltale signs, but sometimes they're not obvious. And I've had clients who've actually put kind of what we call inverted commas cheeky offers, but actually the right offer out on a property, and they've been accepted straight away. So don't feel like you're not going to get your offer accepted, because sometimes vendors have other reasons for selling. There might be life reasons like separation, divorce, illness, death, the next generation trying to sell properties off quickly. There might be motivations around finance, refinancing, and rates have gone up, and, loan to values have gone down, and therefore having problems, and they just want to sell quickly. So very often asking agents, why is the vendor selling? Understanding how they hold the property, look on land registry, look at whether they hold it in a company or in personal names, whether they've got a tax deadline coming up, so understanding vendor motivation can be really, really important. And sometimes you just need to wait for a vendor to become more motivated. And ultimately, that is the name of the game. It's only really when we have a market crash that agents will adjust asking prices, and we'll see the whole market come down. And we did see that after Liz Truss's budget. We did see yields moving out. But we've kind of been bubbling along and since then. So don't be disillusioned by asking prices, pay heed to them, but work out what you can afford for the property. And ultimately, remember that it's the buying price that's going to make you money out of an asset. You need to add value, but it's all about the buy price. So don't overpay would be the biggest message to leave you with. Make sure you understand your multiple exits, and make sure that you put an offer out that accords with those. So hopefully that's been useful today, and I look forward to seeing you next time on the Commercial Property Podcast.